Hello everybody, this is Simon Clark from Trade with Precision discussing some of my key markets of interest this week. Now the first market I want to take a look at here is gold. Now gold has enjoyed a positive environment, positive news flow I should say, for the past, quite a few months now actually, and we've had rising prices in the gold market. In fact, we've had positive news throughout this week as well. We had a big move here in Tuesday in gold prices. That was fueled by a weak PMI report from the US that kind of dampened optimism for a September rate hike. Now this drove treasury yields lower, which in turn made the US dollar a less attractive investment. Now that in turn was promotion or was supportive of higher prices in gold. So if we take a look at the market here on the higher time frames, and if I come and take a look at this here on the weekly, we can start to take a look at how the market price action is looking from a technical perspective. So we can see that the market is in a strong uptrend at this moment in time, and I've spoken about gold in sort of previous videos over previous months, and we were looking for initially moves up here towards the 1,300 level. Now that level's now been broken. The level is now sort of acting as support in price, and we can see that the market's now just sort of pulling back into the moving averages, back into the sort of buy zone here, and now this week we're starting to power out of that. So I'm just going to open this up slightly, because I want to sort of zoom back a little bit here in price, because we can start to get some sort of context of the trend. We can see, each time the market comes back into the zone here, back into the moving average zone, it sort of finds new momentum and the next leg of the trend continues. In fact, what we've had here on a weekly basis is the market's just pulled back into the zone here. It's also sort of clustered with the level here of 1,300. This is not only been the initial target level some months ago, but it's also, if I scroll back, a very clear support and resistance level here in this market. So market finding support here. It could be a nice area for a turning point here in the trend, as it has in the past, and can sort of help us for looking for opportunities for higher prices here in the metal. Now the question is then, what higher prices should we start to look for? And certainly for me, I'm looking at sort of like first base here around the 1,400 level. Reason being is it's the next sort of level of market structure that we can see here in the market. So previous price action back here, the market sort of tested this level a few times and found support and resistance there. So I think a move up towards 1,400 as first option, and then assessing how the market reacts from here. Now above 1,400, if I sort of zoom out of here, we can see that the next sort of market structure point is somewhat higher. So I'm just going to get my drawing tools in here. We're probably then sort of looking on these higher time frames of a level up here towards in between the sort of 1,500 and 1,600 area. That's a long way from where we are currently at this moment in time. There doesn't need to be an awful lot sort of in between, other than fairly sort of a slight area here of 1.4 or 1,400. So if I come and take a look at this here again, even on the higher time frame, taking a look on the monthly time frame as well, we can see that the analysis is still relevant here on the monthly time frame. In fact, the monthly is just in a nice uptrend. It's just had a slight pullback at this moment in time. We've got some nice convergence here on the indicators, just indicating that we've still got rising momentum here in the market as well. So as long as the fundamental environment sort of continues to support higher prices here in gold, what I'm looking for is this uptrend to continue, and to continue in looking for higher prices in gold pretty much into the remainder of this year. Okay, the next market I want to take a look at here is the Kiwi. Now The Kiwi against the US dollar again is also a market that's benefiting from the possible sort of pending future rate hikes coming into the US dollar, again making that currency sort of slightly less attractive, and the Kiwi is benefiting from that. We can see here that the market from a technical perspective, certainly here on the weekly chart and indeed on the monthly chart, has been very bullish. In fact, it's been very bullish through the sort of past year here, and we've now sort of putting in a nice uptrend, which the market's now really starting to get some momentum behind. If we just take a look at the monthly chart here, first of all, and if I just expand this, what we can see is that sort of over the past sort of 10 candles here or so, we've got the market really sort of moving away from the moving averages here, and becoming quite overextended from the moving averages. So it's certainly sort of very bullish, but considering how overextended the market is at this moment in time, the only sort of concern I have is that we might be due a little bit of a pullback at some point in time. So, you know, if there was an environment for the market, or if there was a reason given for the market to have some sort of a retracement, then there's certainly here on some of these higher time frames there looks like a little bit of play in there to come back into a sort of equilibrium area. Having said that, when we start to take a look at the weekly chart is looking much more favorable. Even if I zoom out of here, we can see that coming back to sort of the middle of last year, the market's now really started to move with a nice sequence of higher highs, higher lows. We've now got the moving averages all in the right order here, just giving us a good quality trend to consider trading as well. This is also supported by convergence as well with both the MACD and the RSI, and we can see that we've had that bullish convergence back from middle of last year on this market. So again, at this moment in time, we can see that the Kiwi is a little bit stretched away from the moving averages here. And we can see that, you know, we've got very good predictability here on the weekly chart. You know, when it does become overextended and it pulls back into the moving averages, it finds a sort of equilibrium point here, and that's the sort of pattern that I want to see sort of continuing. So again, at this moment in time, I'm not suggesting that the Kiwi here is likely to retrace any sort of day now, but given that the distance we are from the moving averages, what I'd rather do is just sort of start to wait for a pullback into the averages to start to look for those entry opportunities. So it's not all about identifying the market, it's about identifying the timing to get into that market as well. So what I'll start to do is to look through to some of these lower time frames, and you know, we start to look for retracements back into the zone here. We can see that here on the daily chart, again, we can see the level of overextension that we have at this moment in time, but we can also see the predictability of the market coming back into the zone and looking for that sort of equilibrium opportunity. So when the market comes back into the zone, the sort of opportunities I'm looking for is sort of small bullish candles forming back here close to the moving average zone to get sort of positioned to be able to take advantage of the next leg of that trend. So that's a couple of markets that I'm keeping a close eye on over the next couple of weeks for trading opportunities. I certainly hope it helps and look forward to speaking to you next time. Bye for now.